Understanding lot sizes in Forex is crucial for various reasons, with risk management being the foremost. The chosen lot size directly influences the level of risk in a trade. Larger lot sizes entail the potential for higher profits or losses, thus increasing the risk. Here are other important factors highlighting the significance of understanding lot sizes in Forex. Account management. Forex brokers typically require a minimum deposit to open an account, and the available lot sizes may vary based on the account type. Grasping lot sizes assists traders in determining the most suitable account type for their trading style and account size. Trading strategies. Different trading strategies may necessitate varying lot sizes. For instance, day trading strategies involving quick trades within a single day often favor smaller lot sizes. Conversely, long-term strategies may involve larger lot sizes. Understanding lot sizes empowers traders to select the appropriate lot size that aligns with their trading strategy. By comprehending lot sizes, traders can effectively manage risk, choose suitable account types, and align lot sizes with their trading strategies.